Hey everyone, it's Chris Hadley here with Fairway Home Mortgage. Hope you had a great week, and I wanted to give you a real quick update on what's happening in the economy and the mortgage markets and how it could impact your clients right here in central Pennsylvania. So, the big story this week, of course, is the federal government shutdown that began on October 1st. That's put a pause on all economic reports like jobs and inflation data, which is creating all kinds of stress for investors and the Fed because they're really flying blind right now. Even so, the most recent GDP revision came in stronger than expected, right around 3.8% annualized, and that's showing that the economy still has a fair amount of momentum, and and moving forward. And that strength is really good news overall, but it also keeps inflation in focus, which matters an awful lot to mortgage rates. It's actually the most important factor that impacts mortgage rates. Now, let's talk about what your clients and you really care about, at least as it pertains to me: mortgage rates. Um, the average 30-year fixed mortgage stayed fairly steady this week, hovering just around 6.375 to 6.5% APR. But I want you to remember that there are a bunch of things that impact a rate that any buyer will get, and it's things like their credit score, their down payment, the type of loan they get, and if they're paying points. So be very careful when you talk to your clients about rates and even your sellers, because we do watch that very closely for the individual buyer. And of course, the markets are waiting on the next Federal Reserve meeting that's happening later this month. And if inflation keeps trending down, there's a good chance that we'll see another rate cut. Even though this rate cut that the Fed does doesn't directly impact mortgage rates, it could help mortgage rates indirectly by pushing them down into the high fives or even maybe the low sixes by the end of the year or very early next year. So now, here's how I'd frame this for your clients, both buyers and sellers. Buyers should stay ready to lock when a good rate pops up. Now, we watch this very closely with our clients. When they're in our fold, we watch that literally every day. And if rates dip, we have our finger on the lock button so that we can help them get a lower rate, which could have a significant impact on their monthly payment. And sellers should focus on proper pricing of their home and the presentation of their home, because buyers today are becoming a little bit more choosier, because we are seeing a little bit of a shift where homes are sitting just a little bit longer in the market in certain areas, right? So you want to be mindful of that. And remember that home owners or home buyers that are buying now or have bought in the recent past may have a higher rate to start, but there'll be refinance opportunities in the near term where they can probably get a better deal or better rate in a relatively short period of time. So this isn't a forever rate. So we've got to also have to be willing and able to have those conversations with people, that this is not where you're going to end up just because you're maybe starting in the mid sixes. You can probably end up much lower than that in the near term. So that's your quick snapshot. So be cautious but optimistic about how we move forward through the holidays and the end of the year here, because how you end the year is going to be very important about how your year starts. If you take off the end of the year, you're going to have trouble in the beginning of the year. So just get out there, and if you need any help with any buyers, I am certainly here to help. Let's keep helping more families find homes here in good old central Pennsylvania. Have a great weekend. Take care.